Welcome to Charts Today. My name is David Linton, and today's edition for Thursday, the 15th of December, comes to you from London. And a lot of red on the screen this morning. Markets now digesting the inflation numbers, the central bank moves, and realizing that we are in this inflationary, increased interest rate environment. So the fact is, this is coming back to bite the markets, having had a bit of a relief rally. So we're seeing a lot of red on the screen, and we'll look at those things in a minute. So we had the interest rate rise in the US yesterday, taking base rates to 4.5%, and we've basically seen the UK rate sitting at 3%, and today they're expected to raise by another 50 basis points to match the US. But interestingly, we see here the UK line in red and the US line in blue, and we are seeing how the US were much clearer in the last decade of just raising rates to temper inflation. The UK didn't go up as much; it's stuck at that sort of sluggish 0.75%, while the US actually went to 0.25%. And more importantly, again, have been ahead of the curve, raising more strongly. So the UK is really behind the curve in terms of that, and we see the spread here in the rates. So basically, the US was under the UK, but more recently it's been above the UK. So interestingness to seeing that differential. But of course, the UK Monetary Policy Committee have got the advantage of having seen what the US did yesterday, and they will almost certainly do the same thing. So the markets are expecting 0.5% rise, 50 basis points. So let's look at the dollar, first of all. It's actually up a bit this morning, but it's failing to get back through that 105 level. That's really quite key. We've still got the downside targets, but we're just seeing a little bit of dollar strength this morning, and that means we are seeing that rise against the yen as well. We are still seeing that medium-term fallback in the dollar. And if we look at sterling, remembering this is my weekly, my daily, and my 60-minute chart, my long-term, medium-term, and short-term view of the market with the corresponding point and figure targets. So we see sterling hit that 124.50 level, and with that dollar strength coming back in, we're just seeing sterling falling back to the 123.30 mark. But interestingly, the trend is up on the short term, very, very clear trend on the medium term, and the long term we're not quite yet bullish, but we've got these targets to the high 120s, 128, 128, 125, 127.50, 130 is one of the targets there. So sterling looking like it's going through a resurgence. Against the euro, we're sitting at 116.12 this morning, so that's quite key. We'd had nudged the 116.70 level, and again, this is a more gradual trend, and so we are still seeing sterling appreciating there. Taking a look at against the Aussie, we're seeing sterling rising there as well, as 182, so that's looking pretty strong too. Bitcoin is sitting at 17,600, relatively static over the last few months, just gradually declining. The long-term downside target still very much there, but interestingly, we are just sitting in the 17,000 area. The S&P 500 index was down 0.6% yesterday, but we're seeing the futures really selling off today. So the S&P future down 1%, and the Nasdaq E-mini down 1.25%. So we're going to see tech falling again today, and there'll be big moves in stocks like Tesla. News again on Musk selling more, holding there, and we've all eyes really on watching Apple. Can it hold that 130 mark? We're a fair way off that at the moment, but that's going to be one to watch. The FTSE futures down 0.75%. We're really seeing a sell-off across the board. The DAX in Germany down 1%. Having hit resistance here on the cloud, and we are just seeing all markets really struggling, and even in Asia. So Japan has looked strong. It's the best of a bad bunch, down 0.25%. China was down 0.25% as well. Of course, all eyes on the COVID numbers there. Will we see this as a double bottom? We really need to break that fulcrum point at around 3,400. So it's a little bit wait and see there. And if we look at the Sensex, it's off 1.3% today, but the reality is this is still the best looking stock market with the upside targets there, so looking very strong indeed. And the Aussie market saw a sell-off of 0.64%. Again, holding up better than the US market, but still just struggling to get back to new highs. So not anywhere near as strong as India. We'll look at the energy mix in a minute, but looking at just some of the soft commodities, we see wheat increasing. News out that stocks are low in India at the moment, and so that's seeing a little bit of a bottom there on wheat prices. The long-term trend is still just one of gradual increase. We look at corn, that's down slightly, but again, that long-term trend is still very much up the hill. And if we look at precious metals, we've really seen a fallback here. In line with the markets, really. So we're back into a sort of sell everything bit of a mode, really. And gold, having had a resurgence, is back into the 1775 level. So pulling right the way back to that support level, the level that we've previously seen. So a lot of volatility in the gold price. But realistically, we are just seeing that trend building. And silver, having been sort of knocking on the door of $24, is back now at $23. We can see there it just couldn't get through the $24 level. So short term, we've come back to bearish, got some downside targets, but the medium term trend is looking very good, and we're hitting some long term resistance. So these trends are all lining up. So interestingly, also looking at copper, that's down 2%. That has actually seen a little bit of a resurgence coming back through the cloud on the medium term, but again, demand destruction fears and worries that China's voracious appetite for copper is going to be tempered by global growth. And then if we look at US 10-year yields, we're sitting at 3.5%. So we've got really a 1% differential now there between that and the Fed funds rate. And if we look at the 30-year, it's very similar. So the yield curve, that increase in the yield curve inversion is increasing. Short-term money is cheaper than long-dated money. Now, looking at the energy mix, we've got Brent crude down this morning. We went out this morning as bearish to clients, seeing these downside targets emerging, and same with WTI. We've got these downside targets on the 1 minute there that we just couldn't ignore those. Just waiting for it to be activated, really. We were neutral until we till we break that target, but it does look like Brent is now looking to those new targets, having met the previous targets. Taking a look at coal, we're seeing coal just sitting fairly steady at around 225, and just having had that resurgence is just pulling back. Emissions hit yesterday. 85 is the key number there. We fell back to 85. That's the level we've told clients to watch this morning. We're neutral whilst we're above 85. And we'd be bullish above 90, bearish below 85. So that's really quite key. Looking at some of the gas products, we've got TTF is sitting at 2.3% up this morning, so just finding some support there around that 125 level, just a little bit higher than that. That's going to be quite key to watch. And on MBP, the level is a little bit clearer. We've got this level just over 300, so that's the area to watch as well. You just run that level through the chart, and we can see there that it's around 320. That's the level to watch. Some upside potential there this morning with the targets. Looking at base German power, it's up 0.6% this morning on the Cal 23, which of course is on the way out. Cal 24, little changed. Did fall away quite strongly yesterday, but we are just seeing this gradual edging higher, and so the fact is that we are seeing power markets just nudging that. And of course, if we break 300 euros on Cal 24, then that's going to be quite significant for the market. Now, that's it for today. Until tomorrow, happy charting. See you then.